Hi, traders. Setting up the start of October. We still have a couple more days in September. And the recap of last week was a push. We're looking at the actual price action, and it felt a lot worse than it actually was. As proof, we're looking at the S&P. I offer you the weekly look. You can't even see a red dot at the top. Therefore, whatever we felt was just a small drop in the bucket, as they say. Having a really strong Monday allowed us to have 3 consequent red days, mild, and a really, really strong Friday close. And overnight, Sunday night, we're having a somewhat positive session, especially on the NASDAQ. They want to start the week on the right foot in order to do what? To make a higher high. And that's the algo that's going on. So looking at the calendar for next week, I think there's only one thing to focus on, which are jobs. That's what Powell said he's focused on, him and his team. And so on Friday, we will get the jobs number from the government. What makes it more interesting that we have a slew of Fed heads speaking, I believe 5 of them on Monday, more of them throughout the week. And let's focus on the charts and let me explain to you where we are. If you give me a few minutes, I promise you I can give you some clarity on where the charts are. Last week, I introduced you to these 2 circles. You can see a bright circle on the top right and another one on the bottom left. These setups look very similar. I'll take the circles out so you can see them. We had fallen into the end of August, and then we sprang. And we are fallen. We have fallen, and we are springing, and we are halfway through. So if you believe in Fibonacci, this is where it gets interesting. 61.8. So this week, the objective by the bull is to make a higher high in order to keep this trend alive. Okay, so when will this trend be in jeopardy? It's very simple. The first sign of weakness from the bulls would be to lose the floor at 6,550. So if you want to go to 6,500 so you can remember it, that'll be close enough. And then the next one wouldn't be until 8% lower. And if we keep on sliding down, you can see how long we've gone without a rest until we see exactly where we broke out from. Now, if we look at the SPY, again, I'll show you the boxes. So last week we did disappoint in the sense this box that you see was the target. Whoops. And we did not come to the top of it. We barely broke half of it, and we stalled at the ominous 666. And now we have all of that chop above us. 664 sticks out. It's going to sound silly. 665 and 666. They happen to be round numbers. On the way down, it's 654. All right, so those are the immediate lines to look at. If you have time, I would invite you to come into the live room. We do excellent work, even if it's just to answer a quick question or learn something on the fly. 20 minutes, that's all I need. Pop in, say hi. The gang is amazing. Now the NASDAQ and the QQQ has a bit of the same setup that we have fallen and we're trying to recover half. Every resistance line will count, but they're not concrete roof. Also, you see the words critical on my chart. Please don't be alarmed. Critical for a very short-term period of time. But that also would be the first sign of weakness in the trend. Now we switch to the IWM. They finally broke out. 243, nice and round number. That's the first spot that you should worry about on the way up. And 245 and a half. If the bulls are able to take out 245 and a half, I think they will make a new high easily. Until then, we are stuck inside the Fed box. So on 9/17, we had the FOMC meeting when the Fed came out and said what it said. And we had a huge spike and huge drop comparatively. And then since then, we're stuck in the middle of that box perfectly. I want to remind you that I'm focused on the financials because I believe they brought us up here. and they stand to gain from all of these Fed interventions. They always do. And they too are stuck inside the FOMC big blue box, and they have the same opportunity to follow up with the trend of bouncing and making a new high. So I'll be focused on 54.10 and 54.20. I like to look at the industrials because it seems like they're consolidating for a lot longer than the rest of the groups. You notice how the highs and lows are getting tighter and tighter. So I would imagine there's a lot of energy there. So let's keep an eye on stocks like Caterpillar, Boeing, GE, Honeywell. And finally, we're going to look at fear. The push in the VIX was okay, but it didn't come within $2 of its mathematical lifetime average. The market makers are not that worried about the state of affairs for another month. I'll see you in the live room tomorrow.